Hello, welcome back. My name is Nico. We're doing another trading fundamentals with a closer look at what's been going on with GameStop. Really, I didn't want to be talking about this at all today. I wanted to be looking at my trade management spreadsheet and talking about account management and how much of your monthly gains you are willing to give back before you stop trading for the month, because that should be in your trading plan too. But instead we're talking about GameStop, and in particular we're talking about the issue of the stock and other volatile stocks like AMD, others involved that were halted. Now, a lot of people are crying foul because they're saying, "Hey, the big guys, they can do it. The hedge fund, they can do price manipulation, but when the little guys collectively get involved and start doing it, it's against the rules, and we're gonna stop trading on the stock. It's not fair." Well, yeah, it's not fair. And yes, what Martin Capital Management was doing, I frown upon. It was wrong. They were using their massive buying power to force the price of GameStop stocks down, and that wasn't cool. Um, but when this happens, here at the very end of the chart, I've got the camera closer to the screen because I really want you to see what's going on here. This is my account right here on TradeStation. You can see this is my total buying power. This is all the money I have on TradeStation. I don't know if it's clear on the camera. It's $21,957. That's my entire account. Okay. And I want you to be aware of that for a moment. When this starts happening, this kind of volatility here. Take a look at this. Yesterday, GameStop reached as high as $490, even higher maybe, and went as low as $110, maybe a little bit lower. That kind of volatility is not normal under any circumstances with any stock. That kind of range, that $400 range of price in one day is not normal. It's it's dangerous under any circumstances with any stock. Now, if we consider that as of back here in August, the price of GameStop is like $5. And then later on in December, it started to creep up over 10, up over 15, and it got this big pop up to $40. Now, this is when everything kind of kicked off, because down here at the $20 mark, that's when Martin Capital Management starts thinking, this is a good stock to short because GameStop has an antiquated business model. It's in a lot of financial trouble. They're using fundamental analysis to see what's their cash flow, what's their financials. This stock is kind of overvalued at $20 a share, and we think it will go lower. But they got greedy, and that's what they did wrong. They borrowed. To short a stock, you have to borrow. We talked about that last time. And they were using the weight of their capital to suppress the price of the stock so that they could make money on a stock that should be priced lower than $20 a share. It should be lower because the company isn't strong. And when Redditors found out that they had borrowed 140% of all shares in existence, they took more shares. They were borrowing more shares than existed. They had to replace more shares than existed in the world to their contract holders. Right. Well, there weren't any sellers left in the market. The only only seller in the market was going to be Martin Capital. We talked about that, and so that's when this pop happened, and there was a little bit of a tug of war, and then this explosion all the way up to almost $500 a share. GameStop does not have any business being a $500 a share stock. Just doesn't. But then you're going to say, but why not just let it go? Why not just let people? Because this isn't trading. This is price manipulation. Okay, and you say, yes, Martin Capital was doing price administration. Now, excuse me, price manipulation. Right. But we are talking about two completely different things. Two completely different things. Martin Capital Management was unfairly using their leverage to push the price of a stock back down towards its normal range. And what the Main Street investors have done is they've taken this stock and blown it out of control, way outside anything that could possibly be considered normal. So the issue here for a brokerage, the reason a brokerage is going to halt this kind of stock, and why I'm not surprised at all, I even said so before it got halted. I said it 12 hours before it got halted. Don't get invested in this. It's going to get halted. And the thing is imagine you've got a bunch of people who are even trading with margin. It means they're borrowing money. Maybe they can borrow money at 10 to 1, right? And so now they're borrowing money. They've got a $10,000 position that's now worth $100,000. And what if they lose in this wash? What if somewhere in there they lose in this wash and they don't have the money to pay back? The brokerage has to cover that loss. And what if it happens to thousands or even 100,000, 10,000 traders have the same problem? You can end up losing millions of dollars that the brokerage now needs to cover. Now there's me with my little account of almost $22,000 on a platform that has just gone bankrupt or close to bankruptcy because it allowed people to take orders on a phenomenally unnatural price action on what should be a $5 stock. The brokerages like Robinhood, who trades on a platform called Robinhood anyway, right? I mean, the whole idea that it should be theft is absurd because trading is a business. It was TradeStation, international brokers, a whole bunch of everybody halted this stock because they all have a fiduciary responsibility to all their clients, those who are participating in GameStop trading and those who are not. And I'm happy it got halted, and we all should be happy it got halted. I'm in fact surprised that it didn't get halted by the New York Stock Exchange. So yes, there is some foul play here in the fact that institutional traders were allowed to continue trading while retail traders weren't. But the institutional traders weren't the ones that were threatening the viability of the brokerages as businesses. We have to understand that they're businesses, we're their clients. We have to operate under those terms, which gets us back to what trading should be, which is statistical probability, slow and steady. This is get rich quick. Get rich quick is the fastest way to the poorhouse. Anyway, I hope you understand and appreciate my defense for halting the stocks. I hope not too many people lost too much money, but I'm sure there are quite a few people out there that did, and they won't talk about it. Anyway, like, share, subscribe. Please join the Facebook group. We learn about trading. We learn about stop losses, which Martin Capital didn't have. The fools, right? They're the big guys. There's some traders Real traders have stop losses. And these people gambling in here probably didn't. And a brokerage can't take that risk. Anyway, that's enough for today. Let me know what you think. And we'll talk to you next time. Goodbye.